Hey everybody, it's Eddie here, and in today's video, I want to talk to you guys about investing versus trading. Which one is better? Which one will make you more money? Should you do both? Pros and cons of both of them. I'm going to go over all that, so if that sounds interesting, definitely stick around. Now, if you guys have friends who do stocks, or you've been watching the news, or been on social media, it seems like somebody is talking about stocks all the time. Maybe a friend you know might have said, I made X amount of dollars off of this trade, or made this much percent on this stock. So what do? You download an app, you buy your first stock, and all of a sudden that stock may not do well. In the back of your mind, you're thinking, I'm investing into this company. And some of you guys, you have no idea why you're investing into it. You just hear about it from your friends. So you bought that stock and that stock is in the red. So there are people who make a lot of money and there are people who lose a lot of money. And so you're wondering, should I trade or should I invest, or what is the difference? So first, I want to go over what's considered long-term investing. I believe that it's buying into companies and holding them long-term, depending on how long you choose, regardless of the short-term volatility and price action. In your long-term portfolio, you can have a mix of mutual funds, index funds, ETFs, and single stocks. And when it comes to trading, people usually like to trade single stocks and ETFs. Now, when it comes to trading, there's a lot of different ways and strategies you can trade, but the two most common ones are swing trading and day trading. Swing trading is when you buy into a stock and you hold that stock for a couple days, weeks, months, and then you'll sell it for a profit or possibly even a loss. Day trading, on the other hand, is buying a stock and selling that exact same day, holding no overnight positions. An example I can use is through an Apple stock. I have Apple stocks within my Roth IRA and my long-term investment portfolio, and I consistently buy into them without ever planning to sell them, unless they come out with really bad news and the company is losing value. At the same time, in my trading accounts, sometimes I like to buy Apple stocks and hold it for a couple days, maybe make a 5% gain, and then sell it. Or I'll buy Apple stock when it's down 2%, and then maybe throughout the day it'll go back up 2%, and then I'll sell it. Hope that made sense, but now I'm gonna go over the pros and cons of long-term investing versus trading. The pros of long-term investing is that you don't have to worry about the short-term volatility. Your investments compound over time, it's slow and consistent, you can invest confidently and invest with doing very minimal research. Also, if you hold that certain stock for over a year, it will be considered as long-term capital gain, which means you pay less taxes when you sell it. The tax benefits are much better when you do hold it long-term versus short-term. Now, the cons of long-term investing is that it is slow growth. It could be boring at times, and if you invest into your Roth IRA, you can't withdraw till you turn 59 unless you pay a penalty fee. Now later, when you get more familiar with stocks and investing and do a little bit more research, you could invest into companies long-term that have potential upside. Now the pros of trading can be very subjective, but I'm gonna give my personal opinions. You could make more money a lot quicker in a short time period. It is sort of kind of like a skill, so once you've learned it, you could apply it later down the years. You learn a lot more about yourself, especially emotionally. And personally for me, it's pretty thrilling. Now the cons of trading is that it is higher risk. It can be extremely stressful. You can lose a lot of money just as quick as you gain. It can be pretty addicting because you're holding that stock less than a year when you trade. It's considered as short-term capital gain, meaning that you have to pay more taxes on your gains. And there are people who lose sleep over this. Now I'm going to give an example of somebody who invests into their Roth IRA consistently every single year until they retire. Say you just turned 18 years old, you open up a Roth IRA and you decided to max out your investment into your Roth every single year. The max you can contribute is $6,000 a year, and say you invested into growth stock mutual funds, index funds consistently for the next 47 years until you turn 65. With a market returning an average of 9% a year, your $282,000 investment will turn into $4.4 million. And the best part is when you sell all your shares and you withdraw that money out, you pay $0 in taxes. And that is the power of the almighty Roth IRA. Of course, the earlier you invest, the more your money will grow over time. If you're around 30 years old, well, your $210,000 investment will grow into around $1.5 million. So most average Americans can become millionaires by the time they retire if they're patient, consistent, and disciplined. Now, trading can be a bit tricky because everybody has different trading strategies and no one person trades the same way. I've seen someone make $3,000 in one sitting, but that's because they used $100,000 and the market just had to go up 3% and they made $3K. If you only had $1,000 and you wanted to make $3,000, then you have to find a stock that will jump up 400% in order for you to make $3,000, which is pretty much rare or doesn't really happen unless you're in this coin or this stock. Most people who trade usually like to get up 30 minutes to 60 minutes before the market opens so that they can assess the market, figure out their trades, and then the first hour when the market opens is usually when the most volatility and action happens. If you're trading, you're trying to buy the dips, buy low, sell high. If you're swing trading, you're buying a certain stock and maybe it'll be down for a week, but maybe on the second week it'll be up, and then you'll sell it then. Overall, if you decide to trade, from my personal experience, the more you risk, the more reward you get. Throughout the day, you're trying to check the news, if there's any news on that specific stock, and maybe after market, that stock will pump and that's when you want to sell. So with trading, you do have to be a little bit more active and aware of how the market is moving. Trading does require you to do a little bit more research, and again, it tests your emotions. So if the market ever dips, you have to be able to stomach that short-term loss and hold it throughout, because eventually that stock might go up, but it really depends on which stocks you choose. Some people like to go all in on one specific stock, again, higher risk, higher reward, but there are people like me who like to diversify between 10 to 15 stocks to make sure that all my eggs are not in one basket. Now, I think the most important thing when it comes to trading is to know when to sell. I think everybody knows how to buy, but not everyone knows how to sell. So if you do choose to trade, you have to have a very specific strategy, especially an exit strategy. There are some stocks that I know will double in price, so I go a little bit more aggressive into it. And there are some stocks where I know it wouldn't go up more than 10%, so I'll usually sell after an 8% gain. And there have been times where a certain stock looks like it's not gonna do well the next few months, so I'll sell out of that positions and cut my losses. Because in trading, you can't win everything, and you have to be okay cutting losses, but set rules. And so those rules are really going to depend on your strategy, and it takes practice and time to figure that out. It's pretty much like a muscle, a sport, where you practice, and you get better and better and better. Of course, if you get worse at it, then I highly encourage you, don't trade, just invest long-term and you'll do completely fine. Now, in summary, both trading and long-term investing can make you a lot of money. I believe that everybody should invest long-term if they are able to, and trading should just be optional. I think trading stocks is naturally more attractive, especially in 2020 and 2021. But we have to remind ourselves that the stock market is not a way to get rich quick. I think there are a few people who are really good at it and will succeed, but that's like one out of a couple 100,000 or a million. And I think by nature, we think that we can become that one who could become a millionaire through stock trading. There are studies where trading and gambling have very similar characteristics, so make sure that you trade with only amounts that you're willing to lose. Of course, I don't want anybody to lose money when they trade, and I hope you don't. So for that not to happen, make sure that you're not trading with 100% of your net worth. My trading account is only 10% of my entire portfolio. So if I lose 10% of what I have today, I'm gonna be okay. Also, I encourage you to not mix your long-term investment portfolio and your trading account. A lot of people tend to mix the two, and what happens when they lose on a trade, they'll sell some of their long-term investments to buy back their losses, and they end up losing more, and next thing you know, your entire portfolio is in the red. First, I have my Roth IRA with Fidelity, so I max that out every single year, and any extra cash that I have, I put it into my long-term investment portfolio. I like to use M1 Finance. If you guys sign up until the end of February and deposit $100, you do get a $30 bonus, and I did make a video right before this one. I'll link it right up here, but I pretty much invest into that account anytime I have extra cash on hand. And then I use Webull as my trading account. If you guys sign up and deposit $100, you do get 4 free stocks. I don't know for how long, but if you do click the link down below, it'll open up a page and it'll let you know how many free stocks you'll get. But I personally love Webull because of the news, the comments, the community, the trading tools that they provide compared to Robinhood. Nothing against Robinhood. I do have an account with them as well, but for more speculative trading. So my general strategy is, from my work, whatever I make, I put it into my Fidelity. Any extra cash that I have, put it into my M1 Finance. If I profit from Webull, I sell and put it into my M1 Finance portfolio. But this is my strategy. You will have to figure your own strategy out over time. Everyone invests differently, everybody trades differently. You'll figure out your needs because everyone's life stage is so different. Everybody has different needs and wants. So figure out your investing goals, work backwards, and choose a strategy that will help you achieve those goals. So if I had to summarize everything within a few seconds, everybody should invest, few people should trade. Both is fine. Make sure you trade with a small portion of your portfolio and overall invest wisely. And if you're not investing into your Roth and you're able to, please do so. Well, that's gonna be it for this video. If you enjoyed this video, please give it a big thumbs up. If you have any questions, let me know in the comment section down below. Also, there's a lot of things I covered in this video, so if you'd like me to cover a specific topic, let me know in the comment section down below. I will definitely consider for a future video, but other than that, guys, make sure you guys trade responsibly, invest wisely. I'm not a financial advisor, so make sure you do your research and due diligence before you do any sort of investing. But other than that, guys, I'll see you guys in the next video over. Thank you guys so much for watching. Good night, good morning, adios.